Good morning and welcome to Learn to Trade live and free. I have got an order placed in the market as we speak here. Morning, Alan. I've got a long placed here in the FTSE 100. So let me just give you these levels before we start. Now, I might be a little bit higher than I'd like. I'd like it to bounce off this trend line if we can get there. It might just end up taking off, but let's just see what the likelihood is here. Maybe I'll just shift this up a little bit. Let's shift it up to that low there. Quite like that particular point there. So 58.94, I suppose, is going to be the entry here on the FTSE. So looks to me, good morning, Swee. It looks to me like we have got some fairly positive price action. So it is for a FTSE long, and what I want to try and do is see if I can add to it if we get a nice strong trend. So it's a FTSE long, and the price is 58.94. And if it pops down first, we should get taken in, and then if we do get taken in here, I'm going to place an order above here as well. So I'm going to kind of split this up and see if we can get a run. Now with stops on this one, I don't want it closing below here, so it will be tight. But for right now, you can just shove your stops out the way down here. So let's see what that price would be down there. Or what I'll be doing, I should say. I'm not going to tell you guys what you need to do, but that's what I'll be doing. So 58.72 will be a decent enough place for a stop. And what I don't want to see is a close below. If it closes below, I don't mind if it touches the closes on top of the daily pivot actually, but if it was to close below the daily pivot down there, then I want to get out. So I'll save myself at least half. But I think that looks okay at 58.72. So it is for a buy, and it's at 58.94 with a stop loss at 58. So the entry's at 58.94, stop loss at 58.74. I think that will be okay. 58.74. So that gives us just a little bit of room down there. Yeah, that'll be fine. So that'll be our hard stop, if you like, and I'll be happy to come out there. Let me just put that in place as well. Oh no, that's not going to do it, is it? All right, I'll wait until I'm triggered. Wait and see if I get triggered first. If I get triggered, then I'll drag the stop down. And as I say, if I get triggered in, the next thing I'll be doing is putting an order in up just above, just for a little bit more, and see if we get. Good morning, Emmanuel. See if we get an actual move in the positive direction that I'd like. Now, I'm not sure if I'm joined today by anybody or not at this stage. I don't believe Jeff's in. Chloe might be. Let's see what happens here. I've got one other trade that I'd like to get on. So let's see if that triggers us in first. Let's see what we get. Now, if I miss my first entry, I'll probably leave things and see if there's something else later down the line. Market is opening up. Right, there we have it. Now, let's see if we get it. Not looking like we're going to get our entry there, does it? Right, let's got one more trade to put on here. Now, 1 second. Fives. Yeah, that's just getting caught out there, isn't it? Let's see if we can get our price here. Just watching on something else as well. I will check barometers. There we go. That's what I need. Perfect. There we go. Hold on a second. That's not done what I needed it to do. Sorry, give me one moment. Give me one moment. I've just got one other thing to do. That's going to be no good. All right, I'm just gonna wait to get triggered into one other thing here. Right, hopefully we get triggered in here. This tested and rejected that level that I wanted, so I might have to. Let's just shovel that up a little bit more. See if we get one more look at that there. Just see if we get shoveled in here. So I'm having to just move those the entry up a little bit here. I'm just going to change this to a 5. I just need a little bit lower down. Okay, I might enter this because I'm not sure whether that's going to come into play. So let's get rid of that and just get in. So I'm going to be a buyer. That'll be close enough. Okay, so right now what I want to do is see if I can get another opportunity here to the upside above this level. So I'm also going to put in a buy stop at 57.13. In actual fact, I might just have to trigger us in. Sorry, 59.50. If it breaks through this high here, I'm going to go in again. See if we actually get the trend. That'll do me. So I've got 2 trades on the market. I'll basically split up my trade there as the market kind of pushes down and pushes up again. And if I can get both stops to this break-even point, so I haven't got this stop in place yet, but I can now drag it in. So I'm going to move that one down there, and I'll move that one down the bottom as well. And then if I can get both stops to this break-even point, then really it's just half the trade. But it might need to do a little bit more upside for that. I have got one other trade that I want to get in here. So I'm going to be slightly distracted, but just for a moment here. I don't think anybody else is. I have got. Who's in the room with me?
It's me, Ash.
G'day, Chloe. How you doing?
Yeah, good, thanks. How are you?
Awesome. Yeah, not too bad. Not too bad.
Good.
I'm just ferreting away here, Chloe. I've got a couple of trades on in the market, and I'm going to try and get one more in. Sorry about the distraction, guys. Yeah, almost got triggered in, but we didn't quite get there. So we are now in that trade. I've got one more trade to do, and then you will have my full attention. But I need just a bit more of a push in the FTSE, and I can get into this one as well. Go on, get up. Ugh. Now we'll talk about targets in a moment when I've got this other trade on. So I'm very distracted here, Chloe. So it's a bit of a busy one. We'll talk about why in a moment, but it is a bit of a busy one today. Okay, I'm going to wait on. There we go. Okay, we might actually get what we need here now. Right, we'll talk about targets now. Actually, let's see what we got. I would say up here now there is volatility creeping into the market, so it may well be a day trading exercise that we are following, but we could trail stops. It might not be the worst thing to do to trail stops. Let's just check what we got on the daily, the hourly here. Looks like we're broken through this area here, which looks pretty good. That looks pretty good, doesn't it? Now we might get this point. I would like to come out here. You know, I'm not particularly bullish on the stock market. On the no, I might actually be in here already. No, that's okay. All right, that's pretty good. That's pretty good. That's worked out okay. Okay, I think things are okay. I think I'm in the other trade. As long as I've done my my calculations right, we should be all right. Yeah, that should be all right. So, how's things with you, Chloe? Sorry, I'm a little bit distracted. I've got a stocks that I'm also trying to trade here in the background, and there's a bit of a different calculation of how much to put on for the stocks. So yeah, just a bit of work to do there. But how's things with you? What's going on? Are you busy? We've got in fact we've got a very busy week, which is probably going to promote some real movement in the market. And I'm going to bring it in the week we are having, because we have got a slew of data today. Unless you've got anything pending, have you, Chloe? You okay for a little while?
I'm okay for a little while, Ash. I haven't got anything pending, but as you say, yeah, things are moving. Things are looking good.
Things are on the move. Now let's have a look then. So right then, so overnight. Now this was a terrible number from Australia, negative 7%. Now that was quarter on quarter. Now I'm pretty sure that was calculated from the first quarter, so not anything too dastardly really at this particular stage. But quarter on quarter down 7% on the Aussie. And we are also seeing we've also got later some ADP non-farm employment change coming in as well. So there is a lot of data. So that will potentially create some volatility. We've also got tomorrow the ISM non-manufacturing PMIs. Now, yesterday's PMI data came in very, very hot at 56, and a big jump from what was expected, and a big jump really from what was before. So we can see continued expansion in the US when it comes down to manufacturing. We also see that we also want to know what the service sector is doing. Now, it might kind of put things on hold just a little bit, but ISM are coming in as it did, and then Friday, non-farm employment change. So a big week for the stock market today. So that's all the things that we've got. Now, on top of that, we have so looking at that now, we've only got a proxy for the in fact, no, we don't have to have a proxy. Let's bring in the dollar index on trading view instead. DXY. This is what's going on with the DXY, and really not a huge surprise. But look where it's got trapped. This is where the DXY is managing to react. Now this is a key level here, and the key level goes right back until right back into 2011, and there's a really strong trend line. So this is a primary trend line to the upside. So this is telling us since 2011 the trend in the dollar is higher. So we're looking for upside in the dollar here, and we can see that the dollar has managed to get caught here. You know, it hasn't broken down, and it's showing signs and signals for some upside now. Now that means that the euro dollar becomes a really interesting currency pair to trade short. And yesterday we were talking about maybe putting an order in at 120. And I wanted to do it in the US show, but actually it happened later, and then I just completely forgot about it. But I wish we had put that in, because I'll show you what happened to the euro dollar at a key level. Now it has to get through here, but if it does get through here, it could start forming a reversal pattern. Now the numbers being good in the States potentially could mean that the stimulus is working, and if the stimulus is working, then there will be some anticipation that they can start easing back, because central banks will not want the dollar to be this suppressed using the methods that they're using for too long. Because if we get another recession, then it was surprising the tools they had this time. But if they continue to weaken the dollar, then what are they going to go? They're going to have to go negative percentage rates by quite a bit if this was to happen again, because that would be one of the tools they have, and they can't continue to buy things as they are without seeing some kind of return on their investment. That's what the central bank is effectively doing. It's buying government bonds, and they're going to want a return on investment. So that will potentially come if the economy continues to pick up, and then they can start scaling back and selling off some of their assets that they've got. So we might start seeing that on the euro dollar, and I wouldn't mind seeing whether that is, the dollar index. I wouldn't mind seeing if that's going to happen, and that's going to start putting the other currencies under pressure. Great place to pick up the dollar down here. Really, really good place. And if you've got belief that the dollar could pick up from here, and you continue to watch that economic data, then it would suggest that the euro dollar would be a great price to try and get in. Really good place to sell off the euro dollar. Could be a really good place to possibly sell the pound as well. Let's have a look at the pound now. So we got euro. Actually, dollar Swiss is one of my favorites for some downside, for some upside. And this comes from the COT data. But look how this looks very similar at this stage to what we're seeing with the pattern on the dollar index. Now the euro dollar is the proxy, because it makes up near 70% of the basket of currencies against the dollar to create the dollar index. So really, it is about the euro dollar more than anything else. But this is giving us a fairly decent signal that if the dollar Swissy comes back to this monthly area, then I think we've got a trade on. And I'm going to calculate that in a moment to see what that would cost us, because it's worth going into the low. If we consider what has happened over the longer term here, to get in at this particular point, which, forgetting the rest of the strategy that you've learned, look at this bar. That's an engulfing bar. Now, it might not have gone below the low, but it's pretty close. It's close enough to say that's an engulfing bar, which means we'd enter at the high with a stop at the low. Now, that would have been, as the market opened up today. We don't need to worry about that. We can play the pullback. Now, if the pullback comes, then we'll be looking for yesterday's high, which is here at 0.9101. That would be the order, and we'd be putting stops at the low. So I'm going to place that order, when I calculate the risk. I won't bore you with doing that the way I have to do it, but as soon as we calculate the risk, then I'm going to be looking for a bit of dollar strength and I'm going to place my order down here somewhere. So that will be the plan. Now, euro dollar would be the other thing to look at here. So the euro dollar at 120, look what happened. There's your 120. And I wish we'd gone through with what we talked about putting that order in. It touches 120 and then it tanks. And you can see it kind of happening over a shorter term time frame here. Look at that. Touches 120. Now that was happening. Oh, that was happening when Shukri was on. So I think we were focused on something else. But we did have that trade on that we could have taken there, which is a shame. That would have been a great trade to get on at a very, very tight, with a very tight stop, and plummeting currently to the downside. So I'm a bit annoyed we missed that one, but that's the way it is. That sometimes happens. So it's still a viable option. And as I say, with the dollar so weak, we won't necessarily get the same kind of return as we would have got out of this one. But because we would have got a very, very tight spread on that one, up 100 pips, we probably only would have had to risk about 15, 20. So it would have been a 5-to-1 already, but it's likely to bounce back at some point. Maybe it touches the monthly pivot and bounces back. But the dollar looks like the game back in town, and that is going to put pressure on. And good morning, Shukri. You'll like to hear this, buddy. This is going to put pressure on the cryptos. It's going to put pressure potentially on the US stock market as well at some point. It's going to put pressure on gold. It's going to put pressure on silver. So as we see the dollar start to strengthen again, could be buying opportunities coming back into the market on some of these things. And really what we're watching is for that those data points to suggest that the dollar is going to continue to strengthen. So watch out for data points this week. A decent non-manufacturing ISM, decent employment, decent non-farm, and I think we see some dollar strength for the week. And then if we can get in and we can get profitable, then we can make some choices about where it might go. I think in terms of the dollar Swissy, we're probably there's every chance that we could come and test out the 0.931, and that's what I'd aim for. If we manage to get in down here, then what's that, the monthly pivot there? Okay, there's something wrong with this chart here. It hasn't drawn the monthly pivot down there, but the monthly pivot's not there. But a target would be somewhere around about here, and it'd be a longer term position. So that's the plan. Anything you're looking at, Chloe?
Yeah, quite a few things today, actually, Ash. Last week was a bit of a quiet week, but things picking up again this week. So shall I take over the screen and go through a few?
Yeah, please do.
Alrighty then. That one there. Okay, so I think I'm going to start off with gold, just because I have been chatting about gold for quite some time. And the thing that interests me about gold is the fact that we actually have had this, I hesitate to call it any kind of pattern because it's very, very messy. But we do have this kind of triangle pattern where we've got lower highs and higher lows on the daily time frame. And that for me means that I am not actively looking for trades on gold. When I don't see a good strong trend on the daily time frame, then I tend to move on to something else to look at, which last week was the US indices actually that were still trending nicely. However, this week price has broken out of that pattern, and that therefore does interest me. Now, what I've been looking out for hasn't actually happened. So we can see this pattern a little bit more clearly on the 4-hourly time frame. Lower highs, higher lows, and there's the breakout just towards the end of last week. We had a false breakout with just this spiky bar that didn't actually end up doing much. Price came straight back in. But shortly after that, we did have a proper breakout of that area. And since then, what I've actually been waiting for was a a test of the new monthly pivot. And what I was hoping for was to get a nice bounce from the new monthly pivot in order to take a long trade. That hasn't happened, so price has actually continued downwards. But what that means is it actually looks quite nice in terms of the pattern that I've got here, because instead price could actually come back down and retest this upwards trend line, and that would coincide quite nicely with the weekly pivot for this week. So even though the my plan to trade long from the monthly pivot hasn't worked out as I was potentially hoping for, it doesn't mean that there are no trades to take. I just have to wait a little bit longer, and if I get a bounce at the weekly pivot, then that's something I'll look out for as well. Obviously got to be a little bit careful, because the further price comes down, the more resistance ends up in the way of the trade once it does decide to turn around and go back up. And I have to say, I'm not particularly pleased that price has managed to make it all the way back down beneath the monthly pivot. It's not a particularly bullish sign. However, I will be still waiting for that long from the weekly pivot this week. If it happens, fantastic. If it doesn't happen, no problem. But I probably will reduce the risk on this, just because of the fact I'd be trading back up into the monthly pivot, and I'm not particularly pleased that that's broken down, because usually I like to trade the especially the first test of any new pivot, whether that's the monthly or the weekly or the daily. Now, we did have a touch of the monthly pivot as price opened for the month, but really the next retest was going to be my first test and my first opportunity in, and that didn't quite pan out the way I would have liked. But that's what I'm looking out for on gold anyway. It'll be a little way off, because obviously we've got a little distance for price to retrace until it gets to that area that I've got around the weekly pivot there. A few of the other things that I'm looking at, I know that most people are probably sick to death of me yapping on about the trends on the Aussie dollar pairs. And yes, Ash is quite right in that. Let's just look at Aussie dollar actually. That news out of Australia overnight, well, what was overnight for us over here, has meant that price has retraced, but that's not unexpected, because if we look at the daily time frame here, we ended up with a high test bar yesterday, and I would expect at some point a retracement on the daily time frame anyway. So that news doesn't necessarily mean that suddenly the trend's going to change. Yes, price has moved down, which was expected, and actually the amount that price moved down is not that much compared to the moves that we have seen. Compared to the move that we saw on this day, for example, huge move to the upside, even compared to the move that we saw on this day, compared even to the move that we saw on this day. So today, so far, the move to the downside has been pretty muted, and it definitely hasn't changed my opinion that we're still in an uptrend on the Aussie dollar. I'm still in, I'm now in 3 long positions on the Aussie dollar, and I won't say no if I find another opportunity on the Aussie dollar as well. What I'm ideally looking for here is I'm ideally looking for more retracement. So if I get more retracement, again, I'm looking for that test of the monthly pivot, and that's where I'll be looking to take potential long trades. It might be that retracement doesn't actually come down as far as the weekly and or monthly pivot down here, in which case waiting for that retracement is not going to yield me a long trading opportunity. So I'm also looking over here at the hourly time frame just to see how price action is going. At the moment it looks pretty bearish, which does suggest further retracement. I've got to see, really, ideally, a break of this level here for that retracement to have any chance of getting down to that monthly and weekly pivot area. If that doesn't happen, then instead what I'll be looking for is potentially a higher low on this hourly time frame, followed by a move up, and then I'll be looking for a long opportunity instead. So it depends how the price action pans out here on the hourly time frame as to whether I'll continue looking for that retracement and the test on the 4 hourly down there, or whether I'll start to look for a bullish move on a lower time frame, because the trend remains intact for me, and it's just a matter of where will the retracement go to and where will I get in. So there are a couple of other Aussie pairs as well that I'm keeping an eye on. Aussie Swiss is one of them. The trend isn't as strong, or hasn't been as strong as on Aussie dollar, but we have just recently broken through this previous high, and we've got a little bit of space before the next high above that, which means on the lower time frames I am looking for long opportunities as well. So we've reached a little bit of resistance here that I need to get through if I'm to continue trading on the lower time frames, or alternatively I do need to see a bit more of a retracement. And then Aussie Yen is the other one that I'm looking at. And again, it looks to me like today could be a day of waiting for retracements to happen, because we have had basically the whole week last week was bullish there on Aussie Yen, ending up with the break of this level here, which was my my important level that I was waiting to break, this one right here. So that level's broken. And again, I'm now just waiting for an opportunity to see a retracement either to this next horizontal level that I have marked in, or down to the monthly pivot. Either would be fine. And then I'm looking for a long opportunity there as well. So again, it's just a case of waiting for the correct opportunity. Hourly time frame, I've currently got lower highs and lower lows. So I'm not looking to get in on the hourly right now, but I am looking to see whether that trend will continue there, pretty much the same as I was looking for on Aussie dollar, whether that trend will continue, in which case we may get that test of the monthly pivot, or alternatively, whether I will instead see perhaps a higher low, or perhaps even price come up and make a higher high. Maybe I'll get a retest of the daily pivot, which could give me a nice trading opportunity as well. So that's something else that I'm looking out for. Euro Aussie is another Aussie pair that I'm looking at. Now, Euro Aussie, again, the trend is not fantastic on Euro Aussie. It has tended to move very, very sideways. I mean, pretty much for the last few years, really, apart from this huge move throughout the COVID crisis that we've seen. At the moment, it's gone pretty much back to trading within this range that we've seen for so long. The reason that I'm interested in Euro Aussie is because of the fact that we are just tucked down. Let me see if I can zoom into that a little bit. We're just tucked down here around what is a little bit of an area of support. So if I just mark that in there, we've got support over here. Price has nudged through that a couple of times. We do have further support beneath. So that would be my next level down there, where there's some pretty strong support down there. But there's the potential for price to move between those two levels. And if it does, then on an intraday time frame, there's some decent reward to risk to be had there. Daily time frame doesn't look fantastic, in all honesty. But if we're talking about trading intraday, then there's some decent reward to risk. Price looks really bearish. In fact, I didn't get a retest of the daily pivot like I was hoping, but price pretty much at the moment looks set to break through these lows, and I'm definitely going to be looking out for, hopefully, some kind of retracement here, whether that's on the hourly, whether it's on the 30-minute, 15-minute, wherever the retracement comes to, I'll be looking out for a potential short entry here on Euro Aussie. That's probably the hottest thing that I'm watching at the moment. Even though the trend on the daily doesn't look great, the price action on these lower time frames definitely looks bearish, and I'd be keen to keen to get into something there if at all possible, depending on how it plays out. Just between these two levels. So I'm not looking to hold this trade for days or weeks or anything like that. I'm just looking to take a move to the downside if it presents itself, especially if price gets beneath this level here that it's already pushing down at. So that level of support that has just formed on the lower time frames there, if price manages to get beneath that and then I get a short entry, then I'm definitely interested in that. So that's Euro Aussie, probably pretty high up on my priorities list for intraday trading today. Euro dollar, again, I've been waiting for this retest of the monthly pivot. Price is coming down, but it's coming down pretty quickly. So whether I'm going to get the bounce and the move up I'm looking for, it's looking less likely now, to be honest with you. The price action on euro dollar actually fits more nicely with my short on euro Aussie rather than a long on euro dollar. Having said that, it is an area that I'll always be looking for a trade, monthly pivot, especially when it coincides like this with the weekly pivot. So I'm just going to see how price action plays out on this 4-hourly time frame. If I get a bounce at this point, then perhaps there's a reduced risk opportunity that might present itself there. Pound Aussie is another one that I'm bearish on the pound, I'm bullish on the Aussie, so perhaps there may be an opportunity. At the moment, I think the price action on that Euro Aussie looks better to me, but I will be looking for potential shorts on Pound Aussie as well. It just doesn't look like it's quite behaving the way I'd like it to at the moment. That is pretty much what I'm looking out for. I'm looking at Singapore dollar as well, just because we've got a downtrend here and we've got price coming back up to approach the weekly pivot. So that's always an area I'm going to be interested in. We've had a bounce already from the weekly pivot that has failed. So I'm just waiting for price to come up. Very often, I will find a second opportunity. If we get a bounce that fails at the weekly pivot, it doesn't necessarily put me off taking a second opportunity for a bounce at the weekly pivot. It might just be that price wasn't quite ready to go at that point, but perhaps a little bit later on it is. And the thing I like about this is that we do have this previous low level. So it's not particularly a level of support or resistance in any way. But it is just the previous low. It does happen to coincide with that weekly pivot reasonably well. So that's an area that I'll be looking out for a short as well. So those are pretty much the things I'm looking for, aside from the obvious, Ash, which to me, the obvious is the US indices, which are just absolutely
Oh, they're
smashing.
crazy, aren't they? I mean, what just astonishing moves on some of those. And yeah, I was just putting some things in place actually to trade some of those shares in the US, and yeah, they're just on a tear. It's just you know, it's difficult to know when it comes down, but the Nasdaq is just it's just an astonishing move. And the thing is, you know, the big problem. I'll bring the Nasdaq in. Oh, by the way, if you're in the trade with me on the FTSE, we had two positions, and I've just moved the stops to the first position's entry. We should be okay. I would have thought decent move to the upside. If it comes all the way back down again from here, then it won't look quite as strong. And we're probably able now to kind of look along this trend line here. So we should be by the time that does come back again, we should be above that area. So you can move those stops to break even. This is the target up here. It's at 60.31. So we got plenty of room to the upside. Now that will make the first one potentially 130 pips, and the second one around about 1100. So with a nice tight stop as well. So we're down 25. The first one's already up at 2% with a 2% gain. Second one was down at 30. It's around about 1%. So you should have a nice kind of even spread of both those trades now, up around about 3% on the trade so far. But let's see if we can get up here. If we can get up there, then we're going to get what looks like around about a 4-to-1 on the second one, and what will be a 6-to-1 on the first one. So it could be a 10-to-1 trade by the time we get finished up there. Now, what do we have? So ADP numbers. Yeah, Nasdaq. That's what I was going to talk about. Well, in fact, let's start with the S&P because of where it is on my list here. Just pushing and pushing and pushing and pushing and pushing. No big deal. Nothing to see here. No problem at all. I was trading this short yesterday, as you guys know. Now, when we looked at this, when I was trading this short yesterday, I was trying to illustrate the importance of price. Now, I don't know whether, in fact, those of you not in the US show will not know how this was handled. But what I did yesterday, and it's really a lesson of controlling price and expectation. So when I was looking at this, I was looking at a potential for this here to create a right shoulder. So that was our left shoulder there. There was our head. And at the time, there was a right shoulder here. And I got in somewhere in about there. It was at 35.10 was my entry price. Just there. Now, this is the importance of price, because as the market started to push to the downside from here, I was in the money, looking good. Let's do this. It's all the way down here. I was in the money and looking good. So I was in way early. But there was also a trend line along here which allowed me to use it as a soft stop area. My stops were up there initially, but the trend line here allowed me to kind of stay in the market. I entered the day before and I thought we were going to get a decent move down, but we didn't get that. It continued to move to the upside, found pressure there, and then it started to come down again. And things were looking good initially with the trade. But we can see what happened ultimately. But there was no loss on the trade. And the reason that there was no loss on the trade was because I got a decent entry. Wasn't the best entry on the chart, but it was a decent entry. That meant that with this trend line here starting to be broken, as soon as it started to come up, now there was a timing issue with this. Something had happened at this particular time, and those of you that were in the US show will know this. Something had happened at this particular time. So as what happened, and this started to push to the upside, I closed the trade, and I might have even made a pip or two. I don't know. I haven't checked, but I do know that it was little to no loss. Now that is because of the price, and this is just to illustrate the importance of price. When the picture changes, as long as your price point is good, you can get out. Now with a FTSE, we don't really want to get out because the picture hasn't changed at this point. So we're quite happy just to let it roll. Now it does mean that with the progression of the day, then things could change during the day, and maybe want to close the position with the FTSE. But we got two good prices, and I would focus always on price. Yes, your fundamental bias has to be in play, but always focus on price, because if you can get the price right, it gives you room to maneuver, and you can be wrong and still not get a loss. Now there's the S&P right now, continuing to stretch its legs to the upside, and I don't think that's going to change anytime. Now let's look at the Nasdaq. Nasdaq very similar in regard that it isn't coming back, but the key with the Nasdaq is the longer term aspect of the Nasdaq. Now this looks like it's never coming down, and you have to ask, why would it in the current climate we're in, where we need technology more than ever to stay in touch with people, and for business, actually just for business to keep alive, we're going to need technology. So the Nasdaq will probably continue a run, but you can see, I mean, that is parabolic. That is the most parabolic run that we've seen with the Nasdaq, even since the rally back in 2015. Look at the difference in the angle there. And then if we go back a little bit further, hopefully we can. And this was since the last financial crash. The angle of these, nothing like what we are seeing currently. Nothing like it. And look what can happen to the Nasdaq. Bang. And actually, this can happen to all of them. There's our last kind of real parabolic move, and then all of a sudden it starts to drift lower, and then there's a huge surge lower. So far, really we've got these two huge legs up, and we haven't seen anything. But that is the most significant angle. 1, 2, 3, 4, 5, 6 months of not just upside, but aggressive buying of the Nasdaq. Now it could be that we are in just a completely different era. So what maybe it doesn't come down quite as hard. Yeah, it will fall. It will fall, but that will create a buying opportunity. I wouldn't really want to trade the Nasdaq short. I think it would be a very dangerous play. I think we'd have to be extremely confident that there was some fundamental and macro driver. Well, I suppose micro driver that only really relates to the Nasdaq. Now, Donald Trump putting certain things against China, maybe that's it. Because a trade spat between the US and China does put the Nasdaq under specific pressure. Yeah, basically, yeah, that is that you pretty much got it in a nutshell, Alan. They buy the corporate bonds, and then with the funding that the businesses get, they use to they'll do with what they do with the money what they will. Maybe it's just a bit of funding, maybe it is buying back stock, whatever it is. But the interesting thing really is that the Fed get it free because they print money and then they go and buy corporate bonds or government debt. But they will need to see a return on their investment, and they can't continue to do what they're doing. You don't go out and buy lots and lots of assets and just continue to buy those assets as they go down. There's got to be a point where when the asset starts to turn back in positive territory, that you start recouping some of that money that you invested. I mean, in some respects, it's free money, and I understand that argument, but I don't fully subscribe to it, because really you can't have free money in many respects, because somewhere down the line, while money is getting cheaper and cheaper and cheaper, then it means that that along the line something will be affected. And inflation comes into play and everything else. So it's a very tight balance with that stuff. Otherwise, they would do it all the time. If it was just a freebie and they could just keep an economy afloat by printing and buying bonds and government debt, then they would do it constantly if that was the answer to continued growth. But there's got to be a point where they have a return on the investment, and that we'll probably start to see that when with the dollar strengthening, and then assets could potentially then start coming down if the dollar strengthens. And there's no secret here. Look at when this really kind of starts. In fact, if we do the start point, now we don't have on this chart, but we'll have a look in a moment with a dollar index. But look what happens here. Euro dollar starts to pick up on pretty much exactly the same month, and the move has been pretty parabolic. But this tells us that the dollar may start to strengthen. Now, whatever currency the stock is traded in will suffer more when the currency strengthens. They are more likely to suffer when the currency strengthens. And if you compare what's happened here with the euro dollar to, let's just use a European equity like indice market like the CAC. The CAC, as the euro strengthened, has had nowhere near the same growth pace as the likes of the Nasdaq. Now, obviously, the S&P. Now, obviously, yes, it's down to do with the quality of the companies that are within that indice, but it's also down to do with the fact that they are not as able to compete in a worldwide market if the currency is stronger. Because if you are a buyer of goods from a different region, then you are much more likely to buy from equal two companies that produce the same thing in a country that is producing it cheaper. So with a weak dollar, then you're going to go to America and say, okay, well, let me buy my steel or my copper or my wood or paper or packaging from the States rather than Europe, because when I change my currency into the other currency, into the other region's currency, then I don't get as much bang for my buck. So a weak dollar does help out the the S&P 500, the Dow, and the Nasdaq, and really puts them on the world stage, which is why Donald Trump is constantly putting pressure on Chairman Powell to keep the dollar nice and weak. That's what he wants, because it's really good for business. Now, if the dollar starts to strengthen, which it's likely to do so if the numbers continue to improve, the thing with it is that rallies can't continue to keep going because at some point the central bank will have to, as I say, curb inflation by making sure that the price of their currency is a bit more inflated. They can't survive by allowing their currency to inflate too high, too low, deflate too low, as we've seen in Japan. So there will be some action that will need to be taken at some point for the Fed, and that may well be the driver. Maybe that's when we see the Nasdaq come down. But we are seeing right across the board this morning. I am seeing sorry, not the Nasdaq. I am seeing gold up a shade at 0.25%. In fact, no, gold is down 0.5%. Sorry, gold is down 0.5%. We're seeing Ethereum down 1.16% against the dollar. We are seeing Cardano down 1.8% against the dollar. We are seeing silver down 1.5%, and we are seeing the euro. Actually, I'm not sure of the percentage, but we are seeing the dollar strengthening. Now, that is just telling us that. Actually, is silver down there? I think silver is down there. I'm not sure why I'm getting a. Yeah, silver is down there. Yeah, so silver's coming down. So all of these are starting to weaken. Now you can see, look at the parabolic move in silver. Same thing. Dollar strengthens. We like to see silver weaken. We like to see gold weaken. We like to see the indices just start to wobble a little bit. So we might well see the dollar become a very important player here in our with our expectation. So we need to be very, very careful when we come to trade this, and know that we need the dollar index or the dollar to make decisions on what we are going to do. Now, has this one come back to where we want it? Yeah, I'd like to trade the dollar Swiss on a long here. Let me just see what we got. No, it's not come back just yet. I'd like to trade the dollar Swiss long here on the monthly pivot, if that was to come back, and at that point I want to put the stops at the lows. But it's really important to watch the dollar, very, very important. Now you can do that in one of two ways. You can use the proxy for the euro, the dollar index, if you don't have an account that gives you the dollar index, with the euro dollar, because the euro dollar makes up around about 67 to 70% of the basket of currencies weighted against the dollar to give us the dollar index, and you will see a very, very close correlation in the moves between the dollar index and the euro dollar. So you can use the euro dollar as a to give you a view of what's going on in the dollar, or you can go and get yourself an account which gives you the dollar index. Now that could be TradingView. That there's a whole bunch of other ones out there. But if you look at this, look at the dollar index hitting this point here And if we measure from low to high, it's up around about 1% on the dollar index. Let's bring in the euro dollar here. And that's down around about 1%. So it's really close. And look out, you know, it's basically the reverse. You know, what you're looking at here is the reverse. You've got this. Oops. You got this going on here. So you got a little kind of pattern going on here with the with the euro dollar. Can't get that out of the way. Little pattern going on there with the euro dollar. So just trapped in this range here, which has been going on. You know, there was a rally from the 25th of June, which kind of stopped on the 31st of July. So really throughout August, we've seen the euro dollar just giving us a rangy kind of look about it. Now, if we go to the DXY, it's the same thing. You know, we've got this range, but the absolute opposite, if you like. So this will go down, the other one will be going up because we're looking at the dollar as the second currency pair. And again, 25th of was it 25th of July or 25th of June? 25th of June. This one starts to move to the downside, hits this this range, and then we're looking to trade this. So they are very, very close. You know, if you haven't got a dollar index chart and you don't want one, no big deal. Just use the euro dollar and you get a pretty good gauge of what's going on with the DXY. So, my goodness, this hour's gone quick. Exactly, Shukri. Exactly. They are cheap for those European buyers, and this is one of the reasons that there are some investors out there saying that they believe that the European equities are actually more attractive than US equities, and we might well see that. You know, you watch the dollar turn around, and you watch those US equities. Oh, no problem, Helen. No problem. You watch the dollar, and this is why we need to know about the dollar. We've got to understand the dollar. If we understand the dollar, we understand probably 60 to 80% of the market that we trade. Not necessarily the whole market, but that if we think about that, that's what we trade. Shukri will confirm that if you understand the dollar, you are probably 60 to 70% on the way to understanding cryptocurrencies. So understand the dollar, get really good on the dollar, and this means that we can streamline our education. You know, we don't need to know about the Swiss versus the yen. We don't need to know about the CAD versus the Swiss or you know, any of those things. We need to know about the dollar. If we understand the dollar, then we can branch into indices, we can branch into cryptocurrencies, we can use the commodity space because the dollar is linked so closely with the likes of gold and silver and the rest of them. And we can also obviously use the currencies as well. So everything is linked to the dollar. We understand the dollar, we're in really good shape. So get really close with it. Now, any thoughts on the pound Aussie on the short on the 4 hour? Now, you're probably more qualified to talk about that, Chloe. Let me just have a look.
All right, let me just have a look at that. Pound Aussie short on the 4 hour.
I like it. I like it on the monthly. So I think you've got. It's right on top of the monthly pivot, unfortunately. So it's not the best. It's not the best timing. Oh no, I see. Yeah, it's just underneath, isn't it? Yeah. Have a look, Chloe. Actually, it doesn't look too bad. That doesn't look too bad. There would be one caveat to why I wouldn't want to trade this, but we'll talk about it in a moment. But the other issue you got, actually, that's in a buy zone. I know the pivots are in the way, but you look at your hourly and that's in a buy zone. So not yet, but yeah, give us a comment on it, Chloe, and see what you think.
Yeah, let me just I'm just going to grab the screen for a sec. And then I will. Yeah, so I was actually mentioning this earlier because it is something that is on my watch list for short, based on the daily time frame really, and the fact that what I was looking at was this area here that has been broken to the downside. So ideally, what I would like to have seen would have been price staying below this area and coming down. The fact that it actually came up quite strongly yesterday, all the way back above the monthly pivot, closed as a high test bar, which is great, which means that it is still on my watch list for short, but it does create this area of support down here, which then, if we look to the lower time frames, 4 hourly, if we look at the 4 hourly time frame, yes, we do have a potential bounce at the monthly pivot here. Yes, we do have a lower high, but we've got an awful lot of support creeping in here, an awful lot of long-tailed candles. We don't really have any strongly decisive bearish price action down here, and a lot of opportunity for price to just kind of hover around or bounce around in this area. So it makes me a little bit reluctant to trade short at this point. What I would be doing personally, this setup isn't really good enough for me on a 4 hourly time frame. What I would be doing is looking to the lower time frames to see if I can get some really, really good cyclicity. Because if we look at the hourly here, as you said, Ash, we do have this area here that price is currently just bouncing from. And it's a similar story. If you remember, I was talking about Euro Aussie as well. It's a similar story. We just haven't quite had the momentum to push through this area of support, which leaves it quite difficult to enter a short trade without without the certainty that we're through that level. It's a bit of a lower probability outcome. So what I would much prefer to see here would be price coming down below this area, preferably giving me a lower low below here, and then a retracement and then go. That's what I would be looking for. And the same goes for Euro Aussie as well. I was noting the price action on Euro Aussie, looking for a short position, very similar to Pound Aussie, in fact, apart from the fact that this is a horizontal level price needs to get through rather than a diagonal one. But the same thing applies. We're seeing a lot of support in this area at the moment, and I either need to see a good entry above there with a good enough reward to risk to trade down, which I would have to look to the 15-minute time frame perhaps to catch, or I need to see that level broken. I need to see this lower level broken and then retested before I can be sure to get in short. Because if I get in short, let's look at the 4 hourly. If I were to get in short anywhere around here, even if I were to have got in on that high test bar there, I wouldn't be convinced that I'm definitely heading through that level. And there's the absolute possibility that price could bob around here for the foreseeable future. And that's not, that's not really what I want to get into with my trading. I want to get into a trade and I want to see it just go, ideally. So that's what I'm seeing on Pound Aussie as well. But as you say, Ash, in terms of the higher time frames, I'm definitely interested in this. So it's definitely on my watch list for a short. It's just a case of making sure that we're not trading into any potential support if we are trading short.
Yeah, I'm in agreement with you. I think my issue with it is is some of the numbers that we've had overnight as well from Australia. Now they are backward looking, but they are not necessarily numbers that that would encourage necessarily some buying at this stage. Let's say they're backward looking, so not too bad. But actually, the pound has been fairly strong recently as well. Right now, we're probably pretty much ready to wrap up. I'll see some of you later on at 1:30, and I will see the rest of you in the UK, in the US show as well, which will be joined by Jeff later on. Brilliant session by Shukri yesterday, I have to say. Fascinating stuff on the cryptocurrencies. You guys are, I'd encourage you to get on board with what Shukri's teaching, because it's amazing stuff. It really is, and it will open your eyes and open the doors to more than just cryptocurrencies, actually, because the approach is really detailed and full of just little precious gems. He really does know his stuff. He's from another planet. He tells me. So just before we leave, I have put this target up here on the trade that we are in. It's just below the weekly pivot, but this is a soft target. Now I've marked off this area as well, because you're going to have to watch out for around about the 59.90, 6,000 level on the FTSE. It's already struggling to get through the little gap here, but I do suspect we'll probably at least come and touch the trend line. But you can see that there is a trend line along here. So be careful. Now, soft targets mean that we want it to go there. But if we see price action start to gather negatively here, then we're going to have to start either shifting our stops up, maybe taking some of the profit or taking all of it off at that particular point. This is potentially a day trade rather than a longer term hold, even though I quite like the way the market looks. The big issue that we've got is the VIX. So let's just go back to the VIX. Now you'll see the same themes coming in here, same sort of thing with barometers that we're looking at. But look at the VIX. The VIX now, the volatility index on the S&P has jumped significantly to the upside. It's not quite at the 20% mark from that particular point, but if you go from the very, very low to where we are now, the VIX is up a 30% from its very, very lowest point. So the VIX is up. Now that is suggesting volatility. Now volatility doesn't mean that the market is coming down. It means that the market is going to be jerking around. And if the market is jerking around, it's probably worth taking profit on any trades that you have in the shorter term, because the likelihood is you will get another opportunity to enter if volatility is high. So as I say, don't get confused by the VIX to be saying the market comes down. Yes, it does tend to do that, but what it's really saying is that the market is likely to be bouncing around quite a bit in the coming weeks, and really we know that that's got a high chance of happening because of the US election. So there's some opportunity to get into some of these, even if you think you've missed them. And this is why I'm not too concerned with the Nasdaq going where it's going, because the VIX is telling us that there may well be some cutbacks here that we can actually take advantage of. So don't worry too much if you've missed something. There's going to be some day trading opportunities coming up, I would have thought, this month or next. You know, we've had a pretty difficult summer for day trading, but I think we're going to get a jump in opportunity fairly soon. So that really brings us back to the FTSE and says, let's not go too high with our targets. You know, let's make sure that when we're looking at these targets that we are just shifting stops up behind any run to the upside. You know, even right now, as the FTSE cuts back, you might want to start thinking about where you can make sure that the trade on both accounts is safe. Now, it's got to come back a little bit first, but when you get that bounce point, as long as we break the highs, then maybe there's a safer point to start putting some of these stops. So that is really us, I think, for the morning. Thanks so much for joining me, Chloe. Brilliant stuff as always.
No worries.
Making sure we got see you tonight. See you tonight, Shukri, and yeah, I'd encourage all of you to get into Shukri's show. Brilliant stuff, and a very, very knowledgeable and a generous man with his information. Right. See you tomorrow, gang. And for the rest of you, actually, I'll see some of you at 1:30 UK for the a little pre-show of the show. That is a free show, so I'll see you on the social media for that one. For the rest of you, I'll see you in the US, and for the guys that can't make either of those two, we will see you in the morning, same trade time, same trade channel at 5 to 8. Don't be late. See you soon, Chloe.
See ya, Ash. Bye.